qualche cazzone con un stemma a rete.
Okay, in this series of videos, we're going to continue our look at financial statements and cash flow, and we're going to focus in on the income statement. So with the income statement, we're going to be looking at the results of operations over a period of time. So that is, we're going to be seeing the revenues and expenses, and we can be looking at that over a month, a quarter, or a year. Internally, you might be looking at things on a monthly basis, but in terms of filings with the SEC, that's going to show up in the quarterly results in a 10Q and the annual results in a 10K. Again, these are going to be showing, income statements are going to be showing the summary of the sales and the revenues. It's going to show you a summary of the operating expenses and depreciation. And you're going to get a look at the earnings both before and after taxes. So here's a quick view of a simplified income statement. This is something my goal would be for you to become very familiar with, so you're comfortable kind of working your way down this thing. And so let's just start at the top and work our way down. So net revenues, that is often called the top line. So anytime you're growing the top line, that means you're growing the sales, growing the revenues, and in my mind at least, those are synonymous terms. We're going to back out from that cost of goods sold. It could be also called cost of sales, but these are the costs incurred by the firm in order to generate those sales. So it's going to be both inventory kind of things, administrative stuff. Well, actually, administrative will show up in the SG&A. The cost of goods sold in a simple setting is going to be kind of the inventory, the goods, all the costs that were incurred to assemble those goods, produce those goods, and those will be our cost of sales. The next line item here is going to be the selling, general, and administrative costs. SG&A is frequently called. It's kind of the overhead of the firm. It's paying for all the administrative staff and that sort of thing. Not necessarily those people that are involved in the production of goods and services, but all the people that are necessary to kind of run the company. And if we take the difference between revenues and the cost of goods sold and SG&A, we have this thing called earnings before interest, taxes, depreciation, and amortization, or EBITDA. I call it EBITDA. It may have other names with people, other pronunciations, but anyway, EBITDA is going to be basically a measure of operating income that is very commonly used, talked about, and it takes away, the nice thing about it is it takes away the effects of the capital investments that you're making and the depreciation schedules and depreciation rules that you're following, and it also takes away any distortions from the taxes and your particular tax scheme that's going on. So it's a good way to compare firms, especially in the same industry, as looking at their EBITDA as a percentage of their sales. So from EBITDA, we're going to now take away depreciation, and that leaves us with EBIT, earnings before interest and taxes. And then from there, we take away interest expense. That would, we could also call that the earnings before taxes. I'm not sure how often that shows up, but we take away finally the taxable, the tax amount. Actually, if I go back a step, EBIT, EBT, earnings before taxes, is going to be the taxable income basically. So if we have EBIT, take away the interest expense, we have taxable income. From that, we're going to pay our taxes, and the result, the net of all this, is the net income. Now from that, we can pay dividends. Dividends are not an expense, by the way. It's a negative cash flow. It's cash leaving the firm for sure, but it's not an expense. And then the ending results would be this addition to the retained earnings, so flowing back to the balance sheet that we've talked about in previous videos. So it's a really simple, cursory look at some high-level aspects or high-level items, high-level categories in the income statement. So let's move on here and talk about a few important line items that we want to keep our eyes on. So the first one is this notion of top line growth. It's a very important aspect of firm life. Managers are going to be very concerned with growing the top line. That's typically very important. Kind of in all settings, it's kind of important to have a growing sense of your business, even in a university setting. We would like to see the number of students attending the university growing and the number of people enrolling for a particular class growing over time. That shows that there's increasing demand and kind of good things happen when there's top line growth. The other thing we want to keep an eye on is that expense growth is in check. We want to make sure that it's not growing, certainly not growing far more rapidly than sales are growing. Another way of saying that is that our margins aren't shrinking over time. So the margin is the difference between the revenues and the expenses, and to the extent that we can keep those at least constant, and if not improving, is going to be important. We want to look at operating income. We already talked about that. EBITDA. EBIT is also used as a proxy for operating income. Both of those are going to be important things to keep our eyes on and kind of watch over time. And then the bottom line, seeing that grow is also going to be important. So the net income for the firm, there are some kind of period to period distortions that can cause net income to kind of do weird things. There can be special one-time events. And we're going to talk about that down here at the bottom, where we have these extraordinary items that kind of throw comparability out the window. But anyway, let's move on here. In terms of investors and what they care about, it's really about what is sustainable. What's going to be there year in, year out on down the line. Anytime an investor is buying a company, in theory, they should be buying it for the long term. They should be buying it for what's going to happen in the future, not what's happened in the past, what just happened, but really what are the prospects of the firm in the future? What are the prospects of the firm to generate cash flows and distribute those to the investors of the firm? So things that we would think about in terms of sustainability or seasonality. Frequently firms will have some kind of seasonal aspect to their income, and we want to make sure we keep that in mind. Certainly anytime we're comparing quarters, quarter 3 to quarter 2, if one of those quarters includes the Christmas season, we wouldn't get too excited that quarter is 30% higher sales than the previous quarter. So we want to be thinking about seasonality. We also want to think about other income and extraordinary items. Those may or may not be sustainable. Extraordinary items, kind of by definition, are things that shouldn't be happening frequently. So if you sell one of your pieces of real estate, if you're a retailer and you sell kind of a prime location, a building that you've owned, that's going to create perhaps a one-time capital gain, an extraordinary gain, but you can't continually sell that piece of real estate. You can only do that once. You may have a lot of real estate, but you can only sell each piece one time. So again, what we want to kind of get down to is the net income, scraping out those extraordinary items, those one-time things, so we get a good sense of what is sustainable for a firm. Before I start this, where we compare a firm, kind of looking at 2 different years, seeing how things are changing over time, seeing what that says about the firm, I want to go ahead and stop here. The video is getting a little bit longer, close to 10 minutes now, so I want to stop and we'll pick up looking at this slide in the next video.
Una capullella qua viziera aizzata.
Passi scampagnando per Tuletto, come una poppe te fa guardare.
Ma tu vuoi fare l'americano,
Americano, americano,
senta me che tu fa fa. Tu vuoi vivere alla moda, ma se bevi
whisky e soda,
poi ti senti disturbato. Tu balla rock and roll, tu giochi a baseball,
ma i soldi per camel, chi te li dà?
la borsetta di mamma. Tu vuoi fare l'americano,
Americano, americano,
ma se nai in Italia,
senta me non c'è sta niente a fa' o che napolitano.
tu vuoi fare l'americano, tu vuoi fare l'americano.